Welcome back. Well, the Reserve Bank of India has tightened loan provisioning norms for banks and NBFCs to check the rapid surge that's happening in unsecured retail loans and has also raised the risk weightage from 100% to 125%. Now, to discuss what this means for the sector, how these new norms will impact the digital lending landscape, we have Madhusudhan, who is the CEO of KreditBee, and Satyam Kumar, who is the CEO and co-founder at LoanTap, who join in now. Gentlemen, morning to both of you, and thank you for joining us on the channel. Satyam, I want to start with you. How does the RBI rules on higher risk weight, in order to prevent unsecured loans, how will this impact the industry on the whole? And what would this mean for business, say, over the next 6 to 12 months?
Thank you, Sonia. So as we see, this market has been growing at almost 30% CAGR since 2007. And the whole cash in the system is created by the banking system, who is supposed to collect the deposits from the retail as well as the large institutional investors, and then provide credit. So most of the NBFCs are dependent on banking sector to borrow. As we see that there has been a twin tightening which has been done. One is increasing the risk weightage on the personal loan itself, and also increasing the risk weightage on NBFC exposure itself. So which is the via media again to provide the unsecured exposure in the market. Now, this segment has been growing because of three reasons. One has been there is a large scale growth in education segment, where people have been or the student have been going abroad, borrowing and going abroad. And the second, there has been also an essential category called medical, where a lot of health needs have came in last couple of years, and that requires a large scale expenses. Third, of course, is e-commerce, where we are seeing the consumerism or the consumer side of economy picking up. So all three put together has created a significant size of this market, which has grown for almost like a 4.5 lakh crore to now about 6.5 lakh crore. Plus you add credit card exposure, another 2 lakh crore. So almost 8 to 9 lakh crore is a personal loan unsecured market, which consumers are enjoying. We will see a risk, the price getting transferred. And as we see that most of the banking sector are at a CAR ratio of 17 to 19%. So that means, 40, 50 bips change in their own CAR norms because of unsecured exposure means they will see a significant tightening in exposures being taken on NBFC and exposure being taken directly on consumer for unsecured lending. So these are the two situations which will significantly increase the cost of borrowing as far as the personal loan is concerned. The market itself has an inherent demand. So the market will not shrink. The market will continue to grow. And also thanks to a lot of fintech players and NBFCs who have taken a significant position in this segment. But yes, the cost will definitely increase. This is what we are looking in the immediate term.
Okay, Satyam, that's actually very helpful. You set the tone, just to help us understand how the market is. And as you mentioned, this is almost an 8 to 9 lakh crore market, the personal loan unsecured market, and the cost of borrowing will go up. Madhusudhan of KreditBee is also with us. Madhusudhan, if and when the cost of borrowing goes up significantly, would this impact the market growth?
No, so definitely. First of all, good morning to everyone. So now the credit ratios have been increased. This has both a theoretical and a practical impact. The theoretical impact, I think we have already seen in the markets, where all the banking stocks have gone down and the bank nifty has been down. Now, with respect to the practical impact, I would put it as a short-term and a long-term impact towards NBFCs and fintechs in particular. The short-term impact will be that wherever the fintechs or NBFCs where the leverage, what we call it, for example, the equity to debt leverage, as in like for every $100 of equity, the NBFCs or fintechs can borrow up to like $300 or $400, then it is called as 3x or 4x leverage. Now, because of this credit ratios going higher, the NBFCs or fintechs will not be borrow as much on a 3x leverage. So therefore, there is a shrinkage of funds that will happen, and the NBFCs would be kind of forced to borrow at a little higher cost from different types of lenders. So the cost of borrowing is going to go higher. That is one part. Now, second thing is, in the short-term impact, there are NBFCs which are under-levered, and there are NBFCs or fintechs which are over-levered. For example, like if there is a company which has recently raised any kind of an equity funding, then they are generally kind of under-leveraged, as in they are at 1x leverage or 2x leverage of the debt. So they would still continue to borrow at the rates at which they were borrowing earlier. And therefore, they can see certain growth that would be happening for them in the short-term duration, when the short term is anywhere between 6 months to 1 year. On the long term, for everyone, whether it is an under-levered company or an over-levered company today, definitely there is going to be an increase in the cost of borrowing for this, and they would try to pass on such cost to the end borrowers as well. Most of them would try to pass on such costs. So there is overall increase in the cost of borrowing and cost of lending. So both these things are going to kind of definitely impact. Now, further to that, I think if you look at from the regulator standpoint of view, I think they're generally happy with the financial inclusion that is happening overall, wherein there is much more deeper penetration of formal lending towards tier 2, tier 3, tier 4 cities, which has been enabled by the fintechs. But the pace of growth, the rate of growth is what is concerning them, based on the talks from the RBI governor, or based on the guidelines that has come in. I think they want to arrest that rate of growth. They would definitely want a growth, but they want probably a arrest in the rate of growth at which we have been growing over the past years. So I would assume that this is more like a interest rate cycle. We have seen that the interest rates keep rising when the inflation is going up, but whenever there is a stability in the inflation, they would try to mellow down and then reduce the cost of the interest rates. In the similar way, this credit ratios is also a cycle, where currently, to arrest the growth of the personal lending, I think the credit ratios has been aggressively set as of now. But once the rate of growth is going to stabilize at an acceptable norms, I think this will definitely come down. And that's it. This is the impact of a credit ratio cycle, rather than to read it as a much more longer term or a permanent effect on the NBFCs or fintechs.
So just want to touch upon and get some numbers in on the cost of borrowing and the increase in the cost of lending. So Satyam, currently what are you offering loans at, and what would the number increase to in your assessment?
LoanTap itself, then we would say that
Yes.
we are still in a zone of about 1.5% monthly cost as far as the customer is concerned. So which comes to about 18% annualized cost, which essentially is 50% of what our credit card costs are, which is about 36%. So that is where LoanTap operates. But to give you a general color of the market, if you'll see a sub 50,000 segment, which is where a lot of noise is getting created of over leverage at the consumer level, or ability to repay at a consumer level, that is typically running in the market at anything between 30 to 45% kind of an IRR, and that's a segment which is concerning the RBI, which is concerning the regulator as well as the overall policymakers. But if you go up on the spectrum, which is about 2.5 lakh kind of an average ticket size, most of the banks as well as classic fintechs are lending at about 18 to 21, 24%. And if you go to ultra prime kind of a segment,
Satyam, so just to talk about, Satyam, sorry to interrupt, just to talk about your company, 18% is roughly what you're offering in terms of a borrowing cost or a lending cost to your customers. What would that number increase to?
So we are not seeing a significant pass on immediately, Sonia. Maybe about 55 to 65 basis point kind on a weightage, on a risk weighted pattern, but not broad based. So broad based, the relationship will still start at 18%. It will not change dramatically for LoanTap customers.
Okay, this was a very insightful discussion. We would have loved to, carry this forward, but we have run out of time, not out of questions. Satyam and Madhusudhan, thank you so much for joining us. We'll perhaps invite you for, a broader discussion on another day. Thanks for being with us on the channel.